you are an end user, I would say,
Oh
you're
yeah.
looking to purchase for yourself, now is the time to go downtown Toronto and start looking at condos because there's a lot of units available. Hi everyone, and welcome to Reality Check, where we discuss what's happening in Toronto's real estate market and help you make informed decision buying and selling real estate. So we got Divini here again, and we're gonna talk about what has been happening in the month of October. Trick or Treat was fun.
Was it?
Well, it was. I mean, I didn't go, but we did have our fall event.
Yeah, that was
Hopefully,
fun.
we can put some pictures on top of
That
it.
would be so nice.
Yeah, it was good. It was a little bit chilly. There's a lot of pumpkins around.
Just a little bit chilly.
It was actually freezing. It was
Okay.
actually freezing. We got to figure something out. Next year, we're gonna move it back to Casaloma probably.
Yeah, let's do that.
That was a fun one. So market. I mean, like we actually thought with September rate hold, October rate hold, things would be,
A little crazier than they actually are.
yeah.
I thought so. You thought so.
Well, yeah, that's what we
Yeah.
thought. But one thing we didn't really consider was the fact that the rates are still high and people have problem getting
Offloading.
problem
and then
selling and maintaining their current mortgages.
Correct.
Or if they're
Or
getting a mortgage,
qualifying.
yeah, or qualifying for it. So that has resulted actually in sales to be pretty much like flatlining. So
Yeah.
in the month, let's go to the market watch. We were at 4,600 sales. Last month we were at almost the same number of sales as well.
Literally.
But one thing that has happened is the active listing has gone up. So month over month we've gone up. Active listing has gone up by about 600 units. But what is really interesting is comparing this October to last October. Because funny enough, sales last October was close to 5,000 units. This year we're at about 4,600, so less sales.
Not that much less sales.
Not
though.
that much less
Yeah.
sales, but what's really like sets it apart is the number of
Active listings.
active listings. I mean, we were at 13,000 units last year, and here right now we're sitting at 19,540. Like that's about 40% higher active listing.
But price is higher. Days on market is the same.
Price is higher. So price last year this time was hovering at 1,089,000. Right now we're at 1,126,000, let's call it. So the price has gone up by about 3.5%. Days on the market is the same. Something I want to talk about
Yeah.
is specifically about days on the market. So the days on the market that they mention here is from the time that the listing goes active and it sells. So if the listing was active and it terminates, it doesn't get calculated in that number. So we have a lot of listings that are terminating right now. They've been on the market 90 days, 120 days.
Yeah.
Either they've been taken off or they reduced their price. But
The numbers are not 100% ever, right?
yeah, but like that number is if you're priced correctly. If you're priced correctly, if you're within the market range, it will take about 3 weeks. Again, this is all types of properties, and this is for the entire GTA. So what I really want to distinguish is when we're looking at these numbers as a whole, pictures are different in each area. If we're talking about, for example, a semi in East York, which the inventory is pretty limited and there's a lot of demand for it, that will probably sell still in this market, I would say a week to 2 weeks. And you may still get multiple offers on it. Whereas if you're selling a condo right now downtown Toronto, you're probably sitting at easily 30 to 40 days on the market.
But there are still, like, I was in a multiple offer situation just this week.
On a purchase?
On a purchase for a condo, which we'll dive into the condo market because the condo market is down. But just goes to show that when you have a hot property, there are going to be multiple people that are still going to want to take a poke at it.
Yeah.
And that's kind of a disclaimer I think we should make. Like, we discuss these numbers and everything, but obviously this is not like a one size fits all. It's just a general overview. We talk about the numbers. We talk about, like, I had someone ask me the other day, like, where do you think interest rates are going to go? And it's like, I love that people think we're that important and that we're, the professionals in the field, that we know where things are going. But, like, no one can know, you know what I mean? Like, we look at the indicators, and based on those things, we assume historically where things are going to go because we look back and we say history repeats itself. But we really don't know. So that's something I want to put out there. You don't look like you
no,
agree
no,
with
no,
me.
no, I do. No, I do. No, for sure. I mean, like, if
And
you
I'm
knew it,
talking
I mean,
about that because of the little comment you got on your Instagram post the other day, and it's like you're looking at one sentence in an isolated situation, and you got to really look at what's
Yeah.
being said and the context that it's being brought about in.
yeah, some of those comments are interesting, but
I love
the whole,
them.
The whole,
All of them.
The whole fact is that, yeah, I mean, we make the decision based on the information we have,
We
today
have.
and where we think it could go.
Could
I
go.
mean, right now, what's really set these last 2 months apart was the fact that the interest rates were held, but all over the news for the first few weeks of, I would say, right after they held the rates in September. For 2 weeks, everyone was talking about how the rates will go up in October. And right 3 days after the rate hold, on the news, they said, okay, inflation is going up, brace for another rate increase. That messed the whole buyer mentality, and everyone was like, okay, you know what, the interest rates are going up, so let's wait and see what happens. So that was the entire write-up for September. That's why we see numbers like what we see here, that the purchases are low unless someone is really giving out a deal. The buyer will not pull the trigger. So
Those deal hunters are really, really out there right now, and they're not pulling the trigger. And like, guys, this is like breaking news, but like the deals are now. The deals are now. They're happening. A lot of people have got great deals, and the people that are waiting for the better deals
to come, yeah.
I'm just like, the deals are now. I don't know how people don't see that.
Well, you got to be in the market to see where the deals are. And again, the reason we are seeing the deals is in the numbers. I mean, right now we're sitting at 4.21 months of inventory, so we're over 4 months of inventory. Last month in September, we just hit over 4 months. Right now, it's gone even higher because of number of active listings. So going all the way back to last October, which was a slow still, I remember, it was not, things were not moving. We were below 3 months. We're at 2.6 months of inventory. So we were technically in a seller's market back then, but things were still not moving
as quickly
as right now. But right now, we're officially, I would say, in a lot of pockets, right now, we're over 5 months of inventory. As an example, we're going to talk about it later on.
Condos.
Downtown Toronto condo, we're like close to like, I think we're past 6 months of inventory. So that means, you know, if you see something you like, you go for it, the chances of the seller playing ball and negotiating with you is pretty high.
Likely.
I mean, this is something like I had not seen. I mean, we saw that briefly during the first few months of COVID in the condo market, that the condo inventory shot up just because no one could even get into condos to see. But right now, we know condos are still good investment. The rents are still high.
Yeah.
And
they're the most resilient as well.
Yeah.
Because of the location.
Yeah, if you're buying downtown in a great location, it's
good builder, good location. I mean, those are still going though. And that's the difference between a quality product and, you know, a cookie cutter product, I think, is like when you buy, you'll pay a little bit more, but it's like an insurance policy almost.
For sure, yeah, because down the road when time comes to selling, the ones that are located, the location is great and it's a great builder, they are still selling. And
the good stuff right now is selling.
Yeah.
You know, the not so good stuff is sitting because not everything flatlined. And that's another thing I want to say is people, when they say, you know, where do you think it's going? It's like, I don't know if you want to talk about a prediction, but for me, I think it's like here and we're going to kind of hover around the line, you know, and this week to next week. Yeah, it'll be like higher this week, maybe a little lower next week and a little higher and like, you know. That's
so that's what it's, I think that's how it's going to be for the remainder of the year, all the way to December. So if, let's say, we are predicting what's going to happen all the way to the end of the year, things are going to flatline. I don't see things picking up or dropping down further than what it is. I mean, unless something drastic happens in December, rates go up again, which is very unlikely. I think we're going to be bouncing in or around the same number in terms of average prices, active listings, and
we're on the same page.
There you go. And in terms of months of inventory going up, what I've been seeing, you know, in November is the fact that a lot of properties that did not sell or were not selling are coming off the market and are not getting relisted. What that means to me is, and I've talked to a lot of agents, is a lot of people are actually pulling the listings out of the market and they are hoping to
a
list
better
Yeah.
day tomorrow,
Yeah.
we'll say, which
In
is
March.
February, March.
Yeah. So if this happens across the board, I feel like in March we're gonna have a flood of listings that are gonna come on the market.
Agreed.
And if the rates haven't really gone down, so I mean, God knows what's gonna happen then. But
I think prices will be impacted for
yeah,
sure.
but again, that would be interesting to see. So months of inventory has gone up, active listings has gone up, sales have come down, average price has slightly gone up,
Which is
month
good.
over month and year over year. Year over year, 3.5% up, month over month, by $6,000 up. So that's something to watch for. Again, going back to our dot chart, I mean, we're seeing right now, we saw the bottom of the market this year in August, which I think it's probably gonna hold unless December comes in drastically lower. But and we saw the peak of the market essentially in May, which I think it's gonna hold pretty strong. And if you recall, May was just before June's rate hike. Things were getting a little bit crazy. Everything was starting to get multiple offers,
Yeah, free market
especially
was crazy.
in detached and freehold segment overall. So yeah, anything to add to that, Debbie?
No, that was perfect. Let's
Yeah.
move on.
So let's talk about.
Click.
Yeah, I got a little computer problem here.
But we learned how to highlight today, so.
So let's go to downtown Toronto Central and talk about what's going on with the condo market. So we got over 1,300 units on the
Okay.
market and only 199 of them sold. So that puts us at 6.58
Almost
months.
7 months of
Yeah, we're
inventory.
close to 7 months of inventory. So with that being said, that's something that if you are a buyer, especially if you are an end user, I would say,
Oh,
you're
yeah.
looking to purchase for yourself, now is the time to go downtown Toronto and start looking at condos because there's a lot of units available. So again, that is something to look for. If you're an investor, you want to
This is
purchase
the perfect storm for you.
when everyone is selling. When the months of inventory is high, that's when you want to be purchasing because that's when you can get the deals. Back in February of 2022, the months of inventory was close to 2 weeks. So there was no chance of anyone getting a deal. If you actually bought a house, you were lucky and you had to overpay for it in order to secure it. So now
Yeah.
this is the opposite. So-
Even though we have the high interest rates, right? Because obviously
Yeah.
we don't want people to think we're like, lost. We get it. There's high interest rates.
I mean, we
but
talked
you're
about
not
it-
going to get good deals in a scenario like this
Yeah.
with low interest rates. Like that's two things that are colliding.
We had an episode, Real Talk, with
Yeah.
Piero, and we
Yeah.
talked about how
Link that.
buying, the link, we'll put it down below. So there is a portion there that we talk about how right now in the higher rate environment, you're purchasing a condo, and that was a live example of something that really was on the market at the peak of the market at 800,000. Right now you can buy it at 650,000. Even with the higher interest rate, your monthly payment is going to be lower. So these are things
Correct.
to keep in mind. In terms of the detached market, again, same situation.
Wild.
Toronto itself, in terms of detached, is over 5 months of inventory. So that's again something that,
If you're looking to upgrade,
if you're looking to upgrade, now
Get
is
that
the time.
starter home.
Especially if you are in a townhouse or a semi-detached, because townhouse and semis are still pretty attractive and they are limited in supply. And the purchasing power for them are pretty high still. So if you're upgrading from a town or a detached, going up into, from a town or a semi-detached, upgrading into a detached, now would be a great time to do it. In Richmond Hill, there was 320 active listing, only 74 of them sold. That's over 4 months of inventory. So these are the pockets overall that everyone should be looking at if you're considering a purchase. Anything else to add? That's it.
not the best time if you're coming from a downtown condo and you want to upgrade though.
Yeah, it wouldn't be, but again, like
I'm joking.
I wouldn't say that would be a bad thing because the percentage drop in condos is much less than the percentage drop
As
in
well?
a detached.
Yeah, good
So I mean,
point.
like let's say even if
Always a silver lining with Nima Kadem.
no, well, I mean, like if let's just assume even 10% drop in your condo. Let's say you own $1 million condo, and it's dropped down, you've lost.
See, the thing is, at the million mark, I feel like it's a lot less affected. It's that 6, 7, that cookie cutter condo that's really the ones that are having a lot of weight in those numbers.
Let's talk about that.
Yes.
Why do you think right now downtown Toronto we see more one bedroom plus dens on the market as opposed to 2 bedroom or 3 bedrooms?
So number one, there's just more supply in that category. And number two, I think when you're looking at these price ranges, and just like detached, when you're looking at, the $1 million mark or the $1.2 million, depending on the neighborhood, right? There's obviously neighborhoods that's trending at $1.5 million. So let's just keep it relative for the sake of me saying that. You're the most affected because that's kind of the affordability. These people don't have the power sometimes to hold on to the property. They don't have the willpower for the cash, right?
Yeah.
To keep that afloat if they have that rate that's fluctuating. So I think that's a big one. And again, for that's the condo. But at the million mark, they're the most affected. The people that are over the $2 million mark, they're gonna be able to hang on to their property a little bit more. Again, that's one way of looking at it. There's many, many ways to approach it, and I'm sure you have your input that you want to add.
Why I think we see a lot of one bedroom plus dens right now on the market is due to the fact that a lot of people that purchased these properties were investors. And a lot of people bought these properties, let's say, in the last few years, and many of them are underwater due to two reasons. One, a lot of these condos are rent controlled.
Yeah.
And the rents that are being paid are not covering the expenses. So the mortgage rate has gone up, the expenses have gone up. They've only been able to increase the rent by 2.5% last year, 2.5% previous to that. It was frozen for a couple of years, like you couldn't even increase the rent. So right now, actually, I've seen landlords that are negative per month, $1,200 to $1,500. So if you're on a fixed income, there's no way you can sustain that for another year or two. So what you will do is you turn back and put it on the market. But the problem is, once you're on the market, if an investor wants to come and buy it, they run into the same situation if they're buying a rent-controlled unit. But the problem is, now you're going to get rid of all the investors. Now you're going to have end users only approaching you, and those end users that can afford are going to be able to negotiate a better price. So that's one reason why we see a lot of one bedroom plus. Then two, there's a lot of supply of.
I think it's just exactly supply, price point.
Yeah, each condo, a lot of condos that get built, over 50%, 60% sometimes are one bedroom plus.
That's what I was saying before. It's
so
like
there's
that's
a lot
just
of
the
them.
supply.
Yeah, there's a lot of supply, and you couple that with the bunch of other issues that a lot of investors bought these properties and now they want to offload for various reasons. That's why you get a flood of units.
Also bringing the prices down, right?
Of course,
because people are taking less money for it. They're like, okay, I actually need to sell. I'll take a little less. Now that sets the new precedent of price, and so on and so forth.
For sure, and we're seeing that happening over and over in a lot of condos. That suddenly one type of floor plan comes on the market, and there's probably 3-4 of the same following it within the next few weeks. So all of a sudden, you got a slew of same unit coming in the market, and what it comes down to is who's giving the better deal.
Yeah.
And that's why someone that can't afford to hold on to it drops the price drastically, and that's how the prices fall down.
Stop the bleeding.
Yeah. But for the 2 and 3 bedrooms, it's a different situation, especially in the larger units. We see less of a price reduction because a lot of people are end users that have the units, and if they're just putting it on the market for whatever reason it is, and they can hold it, they will hold it. We don't see a lot of people that have 2,000 square feet units are renting them.
I also think price point, people are in a different financial position.
For sure.
And I think that is a really, really, really big thing, because even if you look at similar situations with the detached market, again, like those starter homes at the $1 million, $1 million, $2 price range, those people are in very different financial positions than the people that are at the $2-3 million price point. Those people can afford to hang on to their properties a little more, right? And again, this is not a one size fits all. I'm not saying the $2-3 million, people are just doing whatever they want, but it is kind of a fact of life. Those people are the most affected.
For sure. So I think in terms of covering the market
condo
stats,
market as well.
Yeah, condo market as well. We're covered that.
It's a loaded one.
So let's talk about what's happening in the news. So, we had two interesting items. One of them was another fire that was reported in a townhouse complex in Vaughan. That was for 30 unoccupied units that went up the flames earlier in November.
We see this so much. I'm so desensitized to it, but all we have
a lot
to
of them
say
happen. We've had that happening in Oakville.
Oakville,
We had that
Vaughan.
happening in Brampton. Yeah, one before
Another
it again.
one in
And there's a
Vaughan.
lot of them happening. I mean, I don't know why.
I
this
wonder
is
why.
happening. I mean, we had Well Condo actually caught on fire earlier in November. That is really strange for a condo. I've never seen a condo
Yeah.
under construction catching up on fire. But again, there was a lot of speculation of why the detached homes were catching on fire. And in all honesty, like there was a bunch of them in Oakville that I personally knew the project. I had dealt with it, and I know when the project was sold back in 2021, they were selling for crazy prices. And right now, the same homes are trading at least 300 to 400,000 less
Lower.
than what a lot of people bought. Depending on what you bought, I know like some people bought townhomes right now that are dropped by about $250,000 on a townhouse. I mean,
And these people are now needing to go get a mortgage at the
Yeah.
bank.
Yeah.
Values, loan to value, it's not computing. And
they
there's
would
a
have to-
shortfall.
and yeah, they would have to come up with the shortfall. But again, I mean, if anyone, in my opinion, finds themselves in a situation like that, that the appraisal is not coming down, or if they're having trouble closing on the property, they have to first acknowledge this ahead of time. If you have a closing coming up in the next 3, 6 months,
Yeah.
or even a year, please be
Be
mindful
vigilant.
of the
Go to the
yeah,
bank,
Be
get that-
mindful of the fact, first of all, what the value of your property is, and two, there are options for you that, you know, as an exit strategy. So one of the best options are assignment. I mean, if you are in a situation that you can't close on, a majority of these pre-construction units have an assignment clause. Some of them are, you know, free of charge. Some of them have a small fee, or some of them could even have a larger fee. But there are still options for that. There are buyers out there that would still
that would
you could-
love to purchase that assignment, right?
Yeah.
Because they're getting a good deal too.
Yeah, and that's an option for you to, you know, reduce your stress. Or there are other options. You know, you could always, you know, look at different financing options, partnering
Absolutely.
up. But the best option I would recommend is that you need to talk to your agent. Find someone that knows the area, knows the pre-construction environment, knows the
has the
assignment.
network
Yeah, knows the assignment industry, and has the network to help you
Offload it.
yeah, either sell it or get a better financing in order to close. Because as we know, we've seen this happen back in 2018, that the market dipped, a lot of pre-construction units came on the market. But even right now in today's market, you go back and see if you kept that unit, you would have made money.
Yeah.
Whoever kept that unit back in 2018, by end of 2019, they were positive on that property.
Yeah.
And look what happened back in 2020. I mean, like, if you could hold that for another 24 months, you would have made a clink
That's the
on
thing,
a
is
lot of properties.
Could hold.
Yeah.
And this is one of the big reasons why I always tell people when they're purchasing pre-construction for me, whether it be a condo, whether it be 3-bedroom or a home, like a detached home, I always say buy with the intention of closing, because
Always.
you don't know what's going to happen and what kind of environment you're going to be in 4 years from now. You know,
That is really key when
so
you're buying
a
pre-construction.
lot of these people thought they were going to have a quick flip, and now look what happened.
Yeah.
Most of the people that are in a bind that I'm seeing right now are people that bought thinking they were going to make a quick buck. Some are obviously unforeseen circumstances, but a lot of them are not.
Yeah.
So buy with the intention of closing.
Yeah, so that is one of the biggest, I would say, items to think about when you're buying. Don't buy to a sign, because that is the worst thing you can do. If the market is like what we have right
Tanking.
now, you know, you're gonna be in a bad situation. The other,
But on the flip side, it can be a great situation too. So if you are buying, just have the option of closing. That's all.
perfect, yeah, that's another option. So another piece of news that's pretty interesting is Bank of Canada since starting to cut interest rates in April. But that's a survey that they did with some banking experts. So this is an article from Globe and Mail. Canadian market participants expect the Bank of Canada to start cutting its key policy rate from a 22-year high of 5% in April of 2024. So essentially, what they're saying is by the, beginning of April, end of first quarter, we'll probably see some light at the end of tunnel for the rates to come down. But again, this is just prediction.
And they're also letting you know that they're going to be a month later than previously forecasted, but it may be actually even later than a month.
Well, I mean, like, yeah, they're saying
I'm just
April.
saying.
Yeah, realistically, I don't. And another interesting part
Central
is
Bank of Monday.
the survey showed a median of 27 financial participants expect interest rates to drop to 4% by fourth quarter of 2024. So with that being said,
I don't see it.
definitely there's going to be an interest rate drop in 2024, but no one knows. Again, 2 years ago they said till probably end of 2023 there will be no rate increases.
Yeah.
But look what happened.
And
we
if
started the
this
rate
does
increase.
happen, if this goes down to these numbers that we're seeing here in such a short period of time, guess what's going to happen, guys? All the people that were waiting and waiting, the pent-up demand, where are prices going to go? I'll leave that with you.
Yeah, that would be an interesting one. I've always said 2025 is going to be the comeback year.
Because, like they say all the time, to slow down a market takes a long time, but to stimulate it doesn't take much.
Yeah, and we saw that back in April and May. As soon as the 5-year fixed dropped to low 4%,
It went nuts.
Market went crazy, and we saw the highest average price in May of 2023.
Yeah.
With that being said, thank you for watching. Be sure to watch the episode that we had NK Real Talk with Piero.
Mr. Fortino from BMO.
From BMO. There were some good pointers there for financing options. Be
Yes.
sure to watch those, and we'll see you next time.
Bye, guys.